Hey guys, Digital Lifestyle here. Back with another video. Let's talk payments. You're going to hear, I don't know who this gentleman is, but these people are going to be talking about payments and ISO 20022, the new standard, and they're going to highlight that banks are not really into it at the moment, but he's talking about data, how all of this is going to be connected and all that kind of stuff. Listen.
Yeah, thank you. Very important topic, and it is the underpinning. Data is the underpinning of all these things that you're talking about. Payments actually kind of drive about 90% of data in what once a customer is onboarded and you have the customer profile, everything else is transaction data. So data is very important, and it's fueled by payments. Now, in terms of the data-rich payments, which has been kind of evolving over the last few years, one of the key things on the business side of payments is ISO 20022, the interoperable standard that was introduced by Swift and the others, a few years back. We've seen that kind of evolve. I think countries and payment institutions have been mandated to get into ISO 20022 frameworks. It helps all of us have the standards in place and get the data inside the payments in a more structured, interoperable format. However, I would say that the adoption has not been that, as big as we would have liked. I was looking at some of the data recently of Swift. Only 35% of Swift payments are actually ISO 20022, and it's been implemented in a large number of places. And only about one-sixth of financial institutions globally have actually kind of figured this out fully, right? So there is a lot of way to go. And then getting into actual users, the businesses in Canada and in other places, they've not fully embraced ISO 20022 yet because it requires change in their systems. They need to have fields in their account payments and receivables and working capital cash management systems to kind of ingest the data rich payments that we send, which will be utilized for straight-through processing or for understanding insights about their customers or providing better value and products. I think it's not there yet. Payments Canada, for example, has done a wonderful job. You've done a wonderful job trying to educate and communicate and improve the knowledge around this in Canada. I think more is required, and it'll take time. I think we underestimated how much effort and overestimated the shortness of time that it'll take, but it requires more work. And when it comes to individuals and e-transfers, I think AFT is now ISO enabled. Links, the large value, we've done that. I think Payments Canada has got the RTR also coming through, which is going to be ISO enabled. So that will enable individuals at the individual level drive rich insights. But I think adoption and making use of the data that is going to flow very well is key. So some ways to go, but the foundations are there.
Yeah. So guys, listen, they're laying the rails. It's taken a bit of time, but these standards are being implemented. Moving on, keeping on with the banking theme, you're going to hear from Travis, Deloitte, Deloitte. Hold on.
Come back to you on same question with the work that you're doing with global central banks. What frictions are they trying to solve for? Are you hearing more on the retail side? Are you hearing it's more about wholesale application?
Just to sort of step back, I think I recognize there is this fundamental competition going on between the innovation that, like Seema referred to, with citizens desperately looking for cheaper, faster mechanisms, and central banks trying to bring a level of sort of thoughtful control, right? And you've got citizens that are going to private money solutions to give themselves the solutions they're looking for that oftentimes maybe don't have the right set of regulatory oversight. So we're in this space where if central banks don't move fast enough, citizens will move faster to private money solutions with all the risks that creates relative to the singleness of money and the trust in the single sort of issuing entity, right? So I think we have to recognize we're in this competition. Just to kind of go back to, I think, what Seema was saying, one of the, from an enterprise standpoint, the huge amounts of money that are locked in various payment channels in the current financial system is huge. And so being able to bring money to more real-time movement increases the velocity of money, dramatically reduces the cost, so that the velocity of money plus the increased time, reduced time to settlement, there are definitely savings there for institutions. On the the customer side, there's dramatic savings if you simply are just moving money from one digital wallet to another. The problem that a lot of consumers have is they may have some stablecoin sitting in a digital wallet, but then it's like, well, what do I do with it? I don't have any way to actually use it. I think if we see more adoption of private money in digital wallets, you will see more e-commerce solutions emerging in countries that take advantage of the money that is sitting in those wallets. So you will see more e-commerce providers saying, I will give you the option to use money in your Web3 wallet on my e-commerce site so that you can take advantage of those funds.
Can I ask you, what rails do you see underpinning that system? Are these going to be open public blockchains? I mean, I heard reference to, the banks have blockchains, but these are permissioned blockchains. You're describing a very different world. Can we delve into that a little bit?
Well, you're exactly right. And this is some of this competition where we see consumers moving to stablecoin systems that are based on permissionless blockchains, right? There are absolutely net new novel risks in those systems, right? And we do not yet have global standards that I think we absolutely need to sort of set how do we govern these permissionless systems, and what is the agreement on security, sort of a corporate governance, but governance over the acceptable distribution, the resilience, the stability of these permissionless systems. We do need that, right? But consumers are migrating to these solutions because it's giving them a solution here and now, right? And so the challenge for central banks and governments is to try and catch up and to agree to develop a global framework on how we set those standards so that we can see a transition and an eventual reconciliation. If we don't, we will see consumers migrating to solutions that are increasingly apart from where central banks want them to be and believe them to be. And then it becomes sort of a compliance nightmare where you're trying to ban those kind of solutions, and yet consumers are trying to do it sort of,
And I think you've kind of nailed the premise of this conference, right? Which is that these rails can transact all types of instruments. They could be CBDCs, it could be stablecoins, could be cryptocurrencies, it could be other types of tokenized assets. But those standards need to apply to these new rails, these new systems across the board, right? Regardless of the asset that's being transacted.
Listen, right? People are moving away from traditional finance quite simply because of the continuous money printing that's going on. You've got apps that allow you to transact crypto peer-to-peer. You've got the system. Here's what the retail customer, me, you, and everybody else who's involved in crypto, who understands it, are moving away from the traditional banking system, and they are, if you like, shit scared. Right? They're now trying to bring it into compliance. This is why you had Gary Gensler and Elizabeth Warren really touting for the banks, trying to go after Ripple on that, especially Ripple. They let Ethereum have a free pass for some known reason, which is the fees on that thing are expensive as hell. But you see now, they're now trying to say, right, we need regulations, we need clarity, we need much more oversight, we need the rules in place, all that kind of stuff, right? But if they create the rules, who does it benefit? It benefits the old system. The old system is dead. It's full up of debt. Nobody wants to be involved in it anymore. People are woken up. They're sick and tired of money printing, especially going towards paying for wars and all the other things the nefarious things that they do. These elites and these people that have been, at the helm for quite some time, the hegemony, the stealing of other people's wealth, whether it be your wealth or in Africa or other places. They're sick of it. Wake up, people. Those who are sitting on the sidelines, maybe it might be time for you to go and do your own research and look up what's going. Look it up, or do whatever you have to do to find out what's literally going on when it comes down to the ISO20022 standard, the banking system, how that is failing, money printing, which is going to enable a lot more money to come into the system, because every time they print, in particular, you saw in 2021 when all that money printing was going on, what happened? Crypto took off, it boomed. They then curtailed crypto by putting in interest rates, which all of them did, all the banks, all those criminal banking organizations, if you will, because they run countries, not the government. So with that said, guys, I hope you do your own research, look at this space from a different perspective, and I hope you like and subscribe to this channel. Take care of yourself. Have a great day. Bye bye.